Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi ta'ala wabarakatuh. We are going to move on to the next topic, that is on accounting for investment in equity. This is in continuation to the first introduction to accounting for investment in equity, sukuk, and other instruments. So now we move on to the how to record it into the accounting record on investment in equity. Okay, let us have a look again into what is investment in equity. I think this is just to refresh your memory with regard to what is in investment in equity all about. Okay, take an example. Malik Islamic Bank is an investor. Okay, invest into investment securities of Permata Nilam in 15 June 2018, and held this Permata Nilam Berhad shares is classified as held for trading at a price of 5 ringgit each, and the price was stable in year 2018. Okay, and in the company has balance of investment fair value reserve in the ledger as at 1st January 2019 of 155,000. The company make an investment further in the year of 300,000 shares in Segar Senyum Berhad at price of 4 ringgit per share. On 15 April, Malik Islamic Bank sold part of the shares which it has in the beginning of the year, at a price of 525. And at the end of financial year end, there are changes in the price of the shares, the two shares that being invested by Malik Islamic Bank. Okay, for Segar Berhad, the price of the share at the end of the year is 380 per share, while Permata Nilam shares, the price was 5 ringgit and 30 cent each. So take into consideration that these are the shares, the transaction which affecting the investment of Malik Islamic Bank Berhad. That is a need for you to prepare a journal entry showing the transaction for the year 2019 and calculate the profit to be distributed to the shareholder, taking into account that Malik Islamic Bank agreed to distribute 25% of the balance of fair value reserve account between shareholders and depositors using profit sharing ratio of 80-20. So this is just an illustration on the manner in which you are going to recognize the investment in shares in the book of Malik Islamic Bank. So recapitulate the earlier knowledge that you have. As a quick guide, you have to understand from the scenario two types of equity, and recognition from the date of the transaction must be at cost plus transaction, at cost plus transaction cost, and all transaction must be recorded at fair value, measured and recorded at fair value. There will be element of remeasurement at the end of the period because there are changes in the value of share from the day, the beginning of the year till the end of the year. So there will be a remeasurement of the fair value. And investment fair value to profit and loss, the gain and loss will be transferred to profit and loss, whereby investment in fair value of equity, gain and loss on revaluation will be transferred to investment fair value reserve. So this is just a quick guide on what are the things that you have to remember in order to ensure that the journal entry that you prepare is according to the requirement of FAS number 33, Financial Accounting Standards 33 that we have discussed earlier. Okay, recognition of investment in Segar, since the price is 4 ringgit and there is another 300,000 units of share being acquired by Malik Islamic Bank. Therefore, the double entry investment in Segar security credit the bank 1.2 million, which is 4 ringgit multiplied by 300,000 units of shares in Segar. Okay, that is on the 2nd February 2019. Remember that the company already have investment in Permata Berhad in the beginning of year 2019 as balance brought down from previous year. So that need to be remembered. And when you have transaction on 15 April 2019, when Malik Islamic Bank sell the share, that definitely you have to refer to the opening balance of the investment from January 2019. So if you if you look at the scenario given, okay, Malik already had 200,000 units of shares in Permata Nilam. And in 15 April, Malik want to sell it. So definitely the sale, when you sell it, there will be recognition of gain and loss. Okay, so the share or original price or the fair value of the share at the beginning of the year is at 5 ringgit. Okay, when you have that value, okay, then you know that the gain and loss will be the difference between the current price or the day of transaction when you make the sales. With that will be the price that you are going to use, which is 5 ringgit 25, compared to the original price beginning of the year, which is actually 5 ringgit. So that will be a recognition of a 25 cent per unit, okay, per unit of shares. So taking into consideration that the sales is just 100,000, therefore 100,000 multiplied by 5 and 25, 5 ringgit and 25 cent will give the total debit amount of 525,000. Whereas the investment account need to be credited with the cost. Okay, what is the cost at the beginning of the period, or the carrying amount, the carrying value of the asset, at the carrying value of the investment at the beginning of the year, which is actually 5 ringgit times 100,000. So you will have 500,000. So this will be credited to investment in Permata Nilam, 500,000, and the difference between the money received for the sales of shares and the cost of the shares will be recognized as profit. Yeah, so you know that the profit is actually 25 cent multiplied by 100,000, which is actually 25,000. So recognition of 25,000 ringgit will be done in profit and loss because this share has been recognized as an investment where the fair value is through profit and loss. Therefore, recognition of gain and loss will be through profit and loss. And debit, so you credit profit and loss for 25,000. And this profit and loss will then be transferred to investment fair value reserve. Fair value reserve. That is on the sales of 100,000 units of shares in Permata Berhad, which Malik Islamic Bank already have it at the beginning of year 2019. So after 15 April 2019, the balance of share in investment in Permata Nilam has balance of 100,000 units. Okay? Has balance of 100,000 units of ordinary share in Permata Nilam. What next? Okay, since there are no other changes in the share, in the share, so at the end of the period, at the end of financial year end, your financial year end is actually after 12 months, right? You have the financial year end, which is if it starts in January, then 12 months later is actually December 31st. Then there is a need for you to remeasure the share, whether there are changes in the value as at the financial year. And so remeasurement, okay, will cause you to have difference between the carrying amount and the fair value. And if there is an increase in the fair value as compared to the carrying amount, then you have to recognize profit. If the fair value is lower than the carrying amount of the share at the end of the period, you are supposed to recognize loss. Okay, so take the example of Segar. Okay, the price of the share goes down from the original acquired price 4 ringgit to 3 ringgit and 80 cent. So there will be a reduction of 20 cent per share. Okay, so how you are going to recognize it? Okay, so you will have since Segar is recognized according to fair value through equity. So any reduction or any gain or loss from the revaluation of the share at the end of the period, at the end of financial year end, will be transferred to investment fair value reserve. So since this is considered as a loss, therefore you are going to debit investment fair value reserve 60,000. You are going to credit investment in Segar 60,000. Okay, what happened next? Okay, and next you will have investment in Permata Nilam. You are supposed to revalue the investment in Permata Nilam. Okay, there is an increase in the fair value of the shares in Permata Nilam. Okay, the increase is actually 30 cent. Remember that the investment has balance of 100,000 units, so 30 cent multiplied by 100,000 units shares in Permata Nilam, you are going to have 30,000. So debit investment in Permata Nilam, credit profit and loss. What does this mean? There is an increase in the value of the share, so you are going to have you to recognize gain, and this gain will then be transferred to investment fair value reserve. Okay, that is how you tackle the increase in the fair value of the share at every financial year and every reporting period. And so your reporting period is 12 months. Therefore, after 12 months, there is a need for you to remeasure, okay, remeasure the value of the shares. Next, if okay, at the end of the year, okay, at the end of the year, the company will share or will distribute the share to the shareholders and investors. Shareholders, there is a need for you to look at what happened to the balance of investment fair value reserve. If the company says that they want to share 50% out of the balance, then that balance will be transferred. That balance will be shared with shareholders and investment shareholders. Okay, looking from this scenario, okay, I think I just draw. Okay, I draw up one account known as investment fair value reserve. This is just for your visual. Okay, you want to visualize what happened to the investment fair value reserve account. Okay, if you want to visualize what happened to the fair value reserve account before you pass the journal entry, this is what you are supposed to do. Okay, the journal entry is up there. It is up there, and you just transfer it into investment fair value reserve account to look at what is the balance like and how much need to be transferred up. Okay, after taking into consideration the journal entry that being mentioned earlier, investment in Permata Nilam, there is an increase in the value by 25,000. Okay, this is when there is a sales in the Permata Nilam shares, you recognize the profit, then 25,000 into the investment fair value reserve. Then investment in fair value reserve, investment in Permata Nilam also have an increase in the fair value in the fair value at the end of the financial year. And but now the balance of the share is only 100,000. So 100,000 multiplied by 30 is 30,000. It will be credited to investment fair value reserve for 30,000. Next, there is also an element of a reduction in the there will be increase. Okay, there will be a reduction in the fair value reserve account for the loss suffered, due to the revaluation of the share, remeasurement of the share at the end of the financial year end shares in Segar. So you will have a debit of 60,000. So you total up debit and credit side of it, and you will try to find out how much will be transferred or how much will be shared with the shareholders and investors. Okay, in this particular question, what does it says? It says that the company agreed to distribute 25% of the balance in fair value reserve. Therefore, this is only 25% out of the balance. How to calculate the balance? Okay, the balance will be calculated based on the total right-hand side of the account, okay, which is actually 210,000 minus any deduction in the investment fair value reserve, okay, due to the changes in the carrying value and the due to changes in carrying value and the fair value, as well as when there is a need to recognize sales of the investment. Okay, so 25% of the balance. So this is actually 210 minus 60,000 first, multiplied 25%, you will get 37,500. This is the amount which will be shared between the investment shareholders and the shareholders. Okay, based on 80%, 80% to the shareholder, sorry, 80% to, let me see, 80% between shareholders and depositors. So shareholders will get 80%, whereas the depositors or investment account holder will get 20%. So the remaining balance will remain in the financial in the investment of fair value reserve account. The balance of 75% out of the total after deducting the offsets, the offsets that you made due to reduction in value of the share as compared to the fair value, the value, the fair value, reduction in the fair value of the share as compared to the carrying amount. Therefore, what left to be distributed to the holders, shareholders as well as investors shareholders is only 35,700. The remaining balance, the balance of investment fair value reserve will be brought down to the subsequent year. So beginning of January 2020, investment fair value reserve account has balance of 112 500 ringgit, at the beginning of 1st January 2020. So that is how you uh, record it in the account when you deal with investment in shares, and what are the consequences of recognizing the investment fair value through profit and loss, and recognizing the investment fair value through equity. So there must be coherent, there must be coherentness on how you treat your, or how you classify your asset, how you recognize your asset. Okay? That is what you are supposed to take care of when you want to record investment in equity. So there must be a coherence between the initial recognition, initial management to the subsequent measurement, and when there is a reclassification. Okay, I think that's about all for this section. And I do hope that you can understand the manner in which you are supposed to record the shares, according to FAST number 33.